Umesh Revankar and Udaya Kumar, now they both join us to walk us through what is happening to the rural economy, both on the loan side and also on the demand side. Umesh and Udaya, good morning. Thank you both for joining us. Umesh, what is your sense on the demand for the CVs? The CV dispatch numbers are not looking all that encouraging. In fact, we still understand there is a surplus capacity. So are you seeing some green shoots somewhere, or it is still a very fragile kind of a market?
Yeah, right now, if you look at CV new vehicle sales, yeah, you are right. The demand is not really great looking at the current situation. But if you look at the demand drivers, the major demand drivers for CV comes from various segments. One is agri output and movement. Then there is FMCG movements. Then you have e-commerce movement. Then you have mining activity, infrastructure, real estate, and of course the other related activities around that, industrial output, production, etc. But there are some sectors that is doing well. Agri is doing well, e-commerce is doing well, FMCG is in great demand. All these segments are growing around 10 to 15% year on year as a demand drivers for the CV. So the vehicles which are suited to this are linked to this kind of activities are today in demand, especially LCVs. LCVs up to maybe smaller vehicles, 1 ton to 3.5 ton net weight. That is in a greater demand because they are the last mile connectivity, last mile reach. And new vehicle demand also is quite good for that. Even used vehicle resale values are also very good. As far as the heavy vehicles are concerned, I think there was an overcapacity before pandemic itself. And because of that overcapacity, the demand is not coming. But now since the lockdown is over and the economy is getting opened up, as there is more investment on the infrastructure, because of the requirement to the infrastructure, they are basically your cement, steel, all this bulk movement that can trigger demand for the heavy vehicles. Right now, the deployment of a heavy vehicle is concerned is quite good. From the no activity in April, May to now, if you look at all these vehicles are deployed, are running, are useful. There was an overcapacity, and that overcapacity need to be used. And I feel it is getting used now. So as there is investment on the infrastructure, I think that demand will come for a new vehicle. It probably we may have to wait for 3 to 6 months for heavy vehicle demand to revive. But as far as the LCVs are concerned, there's a good demand.
Uday, the area which you represent, essentially down the pyramid, the MFI space, that's one space where some would argue that the impact this time around has not been very large, at least in the rural pockets. But the same segment in the urban centers has got badly hit. So what is your understanding there?
Yeah, I think it validates to a certain extent about the urban segment of microfinance impacted a little bit more than the rural. But despite their urban segment, many of them are in essential services. Those have not hit actually. They have been able to manage well during lockdown or pandemic. But there are some segment definitely impacted, which is little more than the rural. But whereas rural definitely not impacted, they are quite well and they're able to manage during lockdown. They're able to continue their activity now. I think I think urban to some extent. No, I'm not saying everywhere. Particularly the destinations like travel destinations, tourist destinations, or a pilgrimage destinations. That kind of segment who are dependent on such ecosystem have been impacted. Other than normal urban segment, these guys are not impacted actually. So it's very less impacted. Yeah, certain pockets are impacted. I could say maybe about 5 to 7% of the entire segment were impacted. Otherwise, not so much. Otherwise, this business is always resilient. I always reiterate this. It is quite resilient. Rural definitely much more resilient than urban.
Mr. Revankar, talking about the geographical spread, given that 40% of your business actually comes from rural and semi-urban areas, and the kind of recovery that we've seen in the rural economy, the fact that they were a little unfazed from the COVID-19 virus as well, do you expect this segment to actually continue to contribute even higher? And could this 40% then, in the near term, actually grow even more?
No, in fact, our presence is around 90% in the semi-urban and rural area. It's 40% semi-urban, 50% in the rural, and 10% in the urban. So I'm predominantly in small town and villages. And basically, when I say semi-urban, if you take Bombay as an urban, Nashik is a semi-urban because most of the agri-related activity or agri-business or the transformation of agri-produce into finished product, all this happens in the semi-urban areas. So as Mr. Uday rightly said, the rural area and the agri-related activities or businesses, cottage industries, they are resilient and they are able to produce and create a demand and consume. So in India, we have the large geography that is linked to the rural and semi-urban areas, which is basically the agri, MSME, and the self-consumption. So I think they are doing quite well. And where our recovery and our collection has improved, moment the moratorium over in the month of September, our recovery has bounced back to 90 plus. So that's where we feel the customers who are linked to these businesses or these kind of smaller activities, who are self-sufficient, are able to generate their own income, they're able to make their livelihood and make the payment.
Sure. Mr. Kumar, would you have any NPA stress, given that the moratorium has ended now? How much stress do you expect to reflect on your balance sheet?
See, within 1 month of end of moratorium, 92% of customers started paying. So you have only 8% customer yet to start payment in September. And eventually in October, November, December, definitely they'll be back. We don't see a huge stress for the industry or microfinance or even for CreditAccess Grameen. It is a one kind of eventual risky situation, like not more than a demonetization event. Actually, it's equal to that or less than that. Considering there are a lot of support system was created in terms of moratorium, in terms of food security for the segment where you work, the DBTs or many supports. I mean, MNREGA spending in the rural, many of that have helped these microfinance customers to be resilient and able to generate cash and able to manage the situation. So our view is the stress on delinquency may be much less than the demonetization event, which was little comparable for this situation. As I said, we need to recognize that there is certain pocket impacted because there was a lockdown. There are some segment of businesses yet to start or yet to generate sufficient cash. As I said, ecosystem linked to transportation, linked to a pilgrimage or a travel or a beauty parlors or a hairdressing salons. I can quote certain number of segments which were little impacted, and they will take little more time. But still, I don't say it is going to be ending up as a stress and delinquency completely. We will have a little loss, but definitely much less than the demonetization impact.
Umesh, when do you think you will go back to not pre-COVID levels, but when do you think you will go back to 2019 levels?
See, 2019 and pre-COVID is almost same. But I should say that we should be going back. If you look at my September numbers, both collection and lending, we are almost near to 2019 level. So I think this quarter, October, November, December is most crucial because we have a festive time, plus we have a harvesting time, both coming together in October and November. And I feel if the quarter of October to December is almost same as the previous year quarter, October to December of 19, then I think we are overcome the COVID impact totally, is what I feel.
And when do you think you will go back to the 2018 levels? When I say 2019 slip off from the tongue, 2018 levels, because that was the time when the industry has started slowing down.
It was, especially for NBFC, you are right. Because 2018 September, there was the major challenge blow came because of IL&FS issue. And post that, there was a slowdown. And if you look at 2018 and 19, there's not much of difference. We were almost growing flat. We would have grown 5% Q on Q from 18 to 19. So if you look at 19 to 20 this quarter, it will be almost same. We should be growing at around 4 to 5% growth year on year. So I think that means the COVID impact is almost negated. It is the slowdown in the economy plus the NBFC issue because of the IL&FS and credit squeeze or the liquidity supply being restricted, that got impacted to most of the NBFCs. And we just feel that today's scenario, because of the government support or RBI support, is much, much better. And we should be able to do much better going forward.
Mr. Kumar, Mr. Revankar, thank you both of you for taking the time out and joining in today. Good to have you both on the show.
Thank you.
Thank you.
Pleasure to be here.